Well, good morning. I wanted to tell you about paying off my mortgage in about 6 years. So this story starts, a long time ago. Mortgage rates were very different, housing market was very different. However, my wife and I were both working, but she had got a diagnosis of multiple sclerosis. We needed to move to a bungalow. We had paid off our previous house, but this bungalow we needed was a substantial amount of money more. It was in the top 10% of house prices in our area. So anyway, we needed to borrow £145,000, which in its time, in 2003-ish, that was a lot of money, right? And we were, to put things into proportion, we were earning 25,000 and 30,000 each. So we watched this television program on BBC, Alvin Hall, and I owe that man a pint. I really do owe him a favour, because he had people trying to pay off their mortgage in 2 years. So I sat there at work in between, lunch breaks and whatever, playing on the spreadsheet, and I put in all my costs, right? Gas, electric, telephone, all that rubbish, and mortgage. And then I put in our income, right? We sort of had 50, add it up, it's about £55,000, right? Which in the day was quite respectable average earnings for what, people without degrees. Anyway, so I put all the numbers in, tippy tap, and I decided, what do we need to spend money on? We've got to pay the bills. We want to go on holidays, but modest holidays, right? And we want to buy birthday presents for the kids and the, nephews, nieces, and all of that. And I did the share save at work, which was a sort of a win-win deal, really. If it all went wrong, you could just take your cash back out and you couldn't lose anything. So I took advantage of everything. Alvin had people working their day job, building stuff in the evening, going working in a pub, doing, I couldn't do that. My wife had MS. He knew that she may not work for, much longer. So we bought this house, and I knew that I couldn't pay that mortgage if she stopped, or couldn't pay it all off in time if she had to leave work. So the aim was to get that £145,000 down as fast as possible. So we decided to allocate ourselves pocket money, maybe £100 a month pocket money, which in a time, we decided not to buy rubbish, to reduce our standing orders. So you might look at your normal standing orders nowadays with Netflix and Sky and gym and going down a car wash, all those things that are discretionary spend, and decide that we were not going to pay stupid amounts for that. So we cut the Sky package down to more or less the minimum. The other thing was cars. You do not need, modern cars. You buy a car and it'll last you 15 to 20 years. We had bought a 1-year-old Toyota Yaris Verso, the big version, the little Postman Pat van. And anyway, so we kept our budget to going to a couple of holidays a year, cottages in Scotland and Wales and Cornwall and, but we didn't do the expensive holidays. Anyway, it's your choice what you spend your money on. Anyway, what I did was I run this spreadsheet and we worked out that we could pay off sort of £500 a month-ish off our debt. And I built this spreadsheet and put all the numbers in, and I couldn't do the 2 years that Alvin Hall was proposing. No way. I couldn't go out and work 3 jobs and do what I was doing. But we could, according to my spreadsheet, pay off the mortgage in 6 years. Now, whatever your plan is, nothing ever goes to plan, right? You will have upsets. You will have set aside money for boilers, fridges, whatever comes along to bite you. I got a proper repayment mortgage. A flexible mortgage where you can make as many repayments as you wanted. And the mortgage market is so different today. I was able to get this mortgage on a self-certified mortgage bet on myself, basically. I put maybe £200,000 down on this house and we borrowed 165,000, I think it was. 145,000 we borrowed. But the reality of this is, right, I can't actually believe it happened, but I had, more or less by year 6, I had that mortgage down to £1,000. All right. So I've got to say, Alvin Hall is a superhero. I'll put you a copy of his book up there or over there or whatever. It's available on eBay for some ridiculously cheap price, like £2.50. Get on eBay or Amazon and buy a second-hand copy of this book. It's 20 years old, but the principle works. If you have spare money, pay off your mortgage. If you are thinking about buying a new car or a leased car, buy a car that will see your needs for as long as they possibly can, 6, 7 years, 8 years. Do the minimum servicing, make sure it gets oil changes and filters, make sure it gets tyres and wipers, all those things. But, keep your costs down. Don't get involved with these heavy leases that take £300-400 a month. You do not need a shiny car on your drive. The other thing with this, right, that shiny car that you get every 3 years, costing you sort of £300-400 a month, it's gonna be the thing that stops you retiring early, because you still got to lease a car. You need the money, and when you have to hand it back, don't you, end of the term, or pay off a large lump sum. But we bought our car outright, about £7,000, I think, at the time. And we got 18 years out of that car. And it was a challenge then just to keep the damn thing running. Nothing really went wrong with it, the headlights are a bit crazed and I had to polish them and things like that. We had 1 or 2 bills. We had a steering rack to change. But the principle being, it's still cheaper to spend £1,000 on a steering rack than to replace your car, you see. So fix the problem, If the windows stop winding up and down, fix them. Get somebody to fix the car. And only if your needs change, like you get more members of your family or somebody's ill and needs a different shaped car, but keep your costs down, keep a steady plan, and get that mortgage down, because it allows you the flexibility to change, to do different things. Without the mortgage debt. Now, going on another 10 years later, Tracy became too ill to work. And I think it was on my 50th birthday. There was a knock on the door at like 7 a.m. on a Saturday. And we got special delivery. Oh, thank you very much. And it was her dismissal notice. She'd been, off work for so long, she'd been sacked. And that was a bit of a shock. I mean, we were going out with all of the gang for a meal, celebrate my 50th. And we got sacked, she got sacked on the day we were going out for a meal. So, but in reality, 3 years, year or two later, I had to leave work anyway. And, because I hadn't got all of the debt, the mortgage, the car loans, and all of that, I was able to take a package and run away from work. So debt is, that's necessary. It's necessary to buy a house. It's necessary, there are times you need to pay for your training, your education, whatever, but unnecessary debt keeps you stuck at work until you're 67. And, I mean, brilliant. I haven't had to work in a full-paid job for a long time now. It's been, 8 years, I think now. So start your spreadsheet, work out where you're spending your money, work out what's essential, what's nice to do, work out what bills you have to pay, and work out what's spare money. And don't forget that you still need pocket money. You still need to be able to go and do discretionary spend on rubbish, because if I want to buy tools for the garage, or my other half wants to buy frivolous things, that's part of life. But anyway, that's my story. Paid off my mortgage in 6 years. I'm Tony, Ant News, the politics of existing.